what do you think when you see this indication that is below the IPO price for Uber?
Well, my understanding is that the allocation of the shares went disproportionately, or at least unusually intensely, towards retail investors, that institutions, in fact, participated at a lower level than I think was expected. And this was not based on a direction of the company. This was simply a supply-demand thing. And when you have most of the demand, or at least a disproportionately large amount of it coming from retail, I think you have to assume greater volatility than you would get if institutions were the big buyers. And I think Bob's point that institutions are looking for lower prices is demonstrably true. The question I would have is how much lower? Because obviously there are fundamental issues with Uber's business model. And in my mind, you know, we can talk about it in a moment, but there are long-term issues that should give everyone pause. And when you raise $8 billion on an IPO, by definition, you are swamping the market with supply.
Yeah, Kara, I mean, parsing that out, obviously it's been a rough day and a rough week in general for the markets. All this uncertainty around U.S.-China trade. How much of what we're seeing with Uber as it gets ready for those first trades is this broader pressure versus the fact that you are talking about a company that is facing a number of potential risks, challenges, and is not profitable?
Oh, I don't think it has anything to do with China here. It has to do with the business model and whether it can be profitable. And the amount of money they're losing is massive. And that has happened before with Amazon and other companies. But this is a lot of money. And the question is, where do they figure it out? Do they do it through Uber Eats or freight or some other way? Because the market that they're in is still an incredibly competitive market. They've got issues with drivers, all kinds of payments. And the question is, will people keep using it if the prices go up? And you know, there's just a lot of issues. And they're raising, as Roger said, they're raising a lot of money. And to me, when there's retail investors involved and not institutions, that says a lot to me. They know that this price is probably too high.
Yeah. Speaking of the price, we now have an indication, $43.50 to $44.50. Now, this is this priced at 45. That was the low end of the range. And the longer that we go on, the lower the indicative price seems to go. I can't remember the last time I saw this happen, certainly for a stock with this amount of just hype and recognition behind it, expectation. Jim Cramer, do you remember the last time we saw something like this on a day this big for the market in general and a brand this big?
No. No, this is kind of, they said at law school, sui generis. Doesn't happen very often, like ever. This is the opposite. I would have thought it was placed better. I thought that Roger made some good points. I've had many people email me in the last hour saying, you know what, I was given at the last minute, I was given some Uber. That's not what I had thought. No, I thought that it was supposed to be tight as a drum. That's certainly not the indication. So I also don't like some of the stocks I'm seeing going up. I'm seeing Procter go up, Procter & Gamble. I mean, you know, there's people who are placing bets to say that this is going to be a not so great day. And no, John, the answer is, wow, no. And the longer this goes, the worse it is.
Well, they may be trying to sort of flush out some of the shake out some flippers, you know, get that done. Maybe it's going to be a while. I don't know.
Right.
I'd love to get more color, maybe from Bob or somebody else, but
I mean, 43.
But you may want to try and shake them out now.
What, you want me to say it should be 44, 45? I mean, this is not. Wow, I don't know. It's really starting to get pretty funereal here.
This is a train wreck.
That is, I mean, we've watched. Yeah. That is not helpful.
What?
And
the funereal aspect?
Yeah, no, the performance of Lyft clearly, which has just worsened throughout the session. I think it was started up this morning.
Yeah.
Is obviously pressuring.
Where are the medallion cabs trading? That's a joke.
Yeah, I got it.
Hey guys, can we step back and just look at the really obvious? This deal is not going well. And it's not going well for really important reasons. There are two underlying assumptions in this business, both of which in my mind are questionable. One is that there's an unlimited supply of people with cars who are willing to drive for an amount of money that is in many cities below the minimum wage. And that secondly, there will never be any blowback from cities and from drivers for the behavior of this company. And I think both of those assumptions are not sound. They've just raised $8 billion. They've dumped a ton of money with really, really bad fundamentals going on right now. And Lyft has gone out and been a turkey. Plus, you've got all the stuff going on in the market in general. I mean, we're looking at a potential train wreck here.
Yeah.
It's hard not to look at the faces there of Dara and Tony West and John Thain. You can obviously see that they are realizing what's happening here with these indications. Kara, to Roger's points, I mean, these long-term challenges and risks, be they execution-related or regulatory-related, I mean, those aren't new.
No, not at all. But it's the fact of the matter. I mean, it's so funny, like these ideas that these things are just going to go up and to the right all the time is such a Silicon Valley mentality. And the issue is, how is this fundamental business and how are they going to make money? And I think it's a requirement for a company like this not to just keep spending money until the billions of dollars of losses is something most investors are worried about, and it's a normal worry to have. And then there's still continuing issues which are going to get worse around driver pay, especially around competition, around self-driving. There's all kinds of challenges this company faces. And so the question is it worth these insane valuations that Silicon Valley put on it? Just because Silicon Valley says something's worth something, it doesn't mean it is. But it doesn't mean it's not a great and interesting business. It couldn't be a big, interesting business. So you have to separate the two out.
Exactly.
Roger, I mean, Uber largely asset-light business. I realize we can talk about the autonomous vehicles and all the development of the technology there. But in terms of the most valuable, I guess, asset that they are sitting on, it seems to me it's data, right?
Well, actually, I think Kara's made, I think, the core point here, which is that the service itself is really attractive to consumers, right? There's obviously demand for not just the basic ride sharing, but also, eats and freight and all of that. And the question is, what is that business going to earn in the long run? Is it a high margin or low margin business? Does the data have value? I look at this and my simple observation is I think these are very low barrier to entry businesses in which this company has gained a material competitive advantage in terms of time to market, but in which there's no ability for them to prevent competitors from diving in. So they have no pricing leverage at all.
Kara, I wonder what happens to the perspective, the feeling in the Valley around the IPO process in general after this. I mean, here is a team at Uber that on paper seems to have done everything pretty conservatively. They said that they tried to go with investors who were going to hold the stock for a long period of time. They priced it at the low end of the range. It's a brand, it's a company that's a household name already, and yet the way this is opening doesn't look good. What sorts of things are Uber employees going to be saying, even Airbnb employees going to be saying once this thing opens up?
Well, it depends on the money Airbnb loses. I mean, I think people are looking for fundamentally good businesses. And the fact of the matter is, consumers love it. That's because it's been inexpensive. The reason it's become inexpensive is because venture capitalists have foot the bills. And now they want the public to foot.
You saw that pop in Beyond Meat just a few days ago, and it's not making money. Granted, it's down 6% today in this broader market. It's such a different. This is massive amounts of money, and it's a question of whether it ever could make money. The market for Beyond Meat is much larger and much more difficult to get into. And so you can bet on certain things that don't make money and realize there are possibilities, but the challenges this company faces are very difficult, and the answers are not there yet, even though people love it. And I use Uber, I use Lyft, but I know I'm getting a deal based on no economics whatsoever. And when that ends, will I continue to do it? That's a really good question. It's still a great concept. It's still a great concept.
The public markets just put up $8 billion to continue to subsidize Kara, which I think is incredibly generous.
Thank you. I appreciate it. Thank you so much.